Hello everyone, welcome to another episode of Market Makers. Today we have with us Mr. Neeraj Jain, Group CFO of Cosmo First Limited. Welcome sir, thank you for joining this show.
Thank you. Thanks for having me.
Okay, so Neeraj, your website mentions that Cosmo First has been wrapping the world in delight since 1981. So please tell us about the humble beginnings of the company and now where it is at this stage of prominence.
Sure. So Cosmo started operations long back in 1981 with close to 1,000 metric ton of the annual capacity. And today we are close to 230,000 metric ton of nameplate capacity. And just to give you a perspective, a mid-sized country like Sri Lanka, South Korea, they might be having close to 200,000 metric ton of annual consumption. So almost equal to one country's consumption, we are able to make the flexible packaging. Today, India is second largest producer worldwide for the flexible packaging. And among the Indian players, Cosmo is one of the leading players. And of course, a large part of the product of this industry goes to FMCG sector. That's why we call it wrapping the world with delight.
Okay, super, excellent. So, this term biaxially oriented polypropylene or BOPP, this is a term which we usually do not hear. So, apart from FMCG, which other industry, your products go to, and what is the key raw material that is required to manufacture this?
Sure. So BOPP stands for biaxially oriented polypropylene film. Factually, as a manufacturing process, we take key raw material which is called polypropylene, which is a byproduct of petrochemical industry. We melt this polypropylene in an extruder and stretch it once in the machine direction and another time in transverse direction. So that's why it's called biaxially oriented and made out of the polypropylene. That's why BOPP stand for. BOPP flexible packaging films are excellent moisture barrier and to a large extent excellent oxygen barrier also. That's why a large part of the product of this industry goes to FMCG sector. Globally, thumb rule is close to 70% product of this industry goes to FMCG sector, then followed by the pharma sector, tape sector, textile sector, cable sector, many, many more. But a large part of this, of course, goes to FMCG sector alone.
Tell us more about the business model of your films business.
Sure. So as a business model, as I said, we make polypropylene film made out of the polypropylene. As a manufacturing process, as I said, once we make the different kind of the flexible packaging film, we dispatch it to customers as per customized requirement of the film. Broadly, we see our business portfolio in two parts. One we call the specialty part of business, which is a value add film. Second is the commodity part of business. So specialty today is close to 60% of our product portfolio. In fact, little more than 60%. And remaining part still remains commodity part of business. While commodity part of business, there has been cyclic in nature. There has been ups and downs depending on the industry demand and supply scenario. Specialty part of business is more research driven. So more you do research, you innovate new products, you innovate new flexible packaging, which actually add value to the end consumer as well as the FMCG sector. It's a much better business model, the value added film, which has a stable margin compared to the commodity part of business. Commodity part is also not a bad business as such. In general, our experience suggests it has 4 to 5 years average payback period. So, but there has been ups and downs in commodity part of business. I hope I addressed your question.
Okay. So what is the size of the Indian market for your product as well as the global market, and where does Cosmo First stand in the leaderboard?
Sure. So first I will explain for BOPP film, then I will talk about BOPET film.
Okay.
BOPP currently globally is close to 10 million metric ton industry. India today is close to 8 to 9% of the global capacity. But in India, this is not a sector where generally you will find unorganized player, because minimum you need 300 crore rupee to put one production line. So hardly 8, 9 players in India making different kind of flexible packaging. Cosmo, of course, has been pioneer to set up BOPP industry in India and continue to be one of the leading player in India for the BOPP film. And Cosmo today is one of the key player globally for the value-added specialty film. So from a largely commodity player about 7, 8 years back, to a large extent, we could decommoditize our business model. And that's how Cosmo is progressing. Second part of our business is BOPET film, which we started our first production line for BOPET in FY 22-23. BOPET globally is close to half of BOPP. And in India, almost 80 to 90% of the BOPP capacity is BOPET film. Our key endeavor on the BOPET film also to make more and more value-added products in medium term, although in short term, we may need to make more commodity products. But with more research, we would, to a large extent, shift that business to largely value-added products.
Okay. So taking the cue from what you mentioned about value-added products, we've seen that in recent quarters, the company's operating margins have been severely impacted, and we wanted to understand what went wrong and when would the margins return to normalcy.
You see, BOPP and BOPET, both industry in India has been running fairly balanced demand and supply scenario till FY 22. During FY 23, a lot of new supply came in the industry. So almost 40% capacity addition happened for the BOPET film, and for BOPP film, close to 20% capacity addition has happened. While the demand has been growing close to 10% year on year, and that has been the trend largely from year 2000 onwards in India. While the demand has been growing very good, but there is a temporary excess supply in the industry on the commodity part of business. But as I said, 60% of our volume we have already shifted to value-add products. So that's why from last few quarters, you will see a significant gap between the results announced by Cosmo First Limited and our peer group, because peer group largely is doing more commodity part of business, and their margin has been more fluctuating compared to Cosmo First Limited. Our endeavor is to increase the share of the value-add products from 60% to more than 80% in next 2 years. And this is what we are working and focusing on.
Okay. So what I understand from your commentary is that because of oversupply, there was reduction in market prices for your products, and because of that, the margins got impacted. Is that correct?
That's true for commodity part of business.
Okay. Okay. So while we understand the prices came down, the value growth probably was slow. But in general, how has been the volume growth over last few quarters? Take the case of an automobile company. Let's say it sold 1,20,000 cars in June this year. Last year in June, it sold 1 lakh cars. So here the volume growth is 20%. Higher volume growth is considered positive as it can lead to higher revenue and profits. Now take the case of another automobile company where volume growth is flat, but still the revenues are growing. Such revenue growth could happen because it might have increased the selling price of its cars. To summarize, volume growth is achieved by selling more units, whereas value growth is achieved by increasing the price of your products.
You see, last capacity expansion we did almost 4 years back. Suppose that we have not added any significant capacity addition. Now in FY23 second half, we have done capacity expansion in the form of the BOPET line. So overall, the volume for FY23 was higher, close to 3% compared to last year. But now going forward in FY24, we expect close to 10% additional volume. And then FY25 and 26, we are adding significant capacity on BOPP and CPP film side. So what we broadly see is in next 2 years, we should be doing close to 60% additional volume compared to FY23 in parts.
So you are in a phase, so rather you are in a capex phase. So what are your current utilization levels of your plants? Capacity utilization refers to the extent to which a company utilizes its existing available production capacity. So say for example, you have a factory that can produce 1 lakh units of a product per year. If you are currently making 60,000 units, your capacity utilization would be 60%. That is, you are utilizing only 60% of your total production capacity. Investors check a company's capacity utilization to get interesting insights. It can reveal a company's production efficiency, market demand for its products, and even the need for future capacity expansion. A high capacity utilization indicates that a company is using its resources efficiently or optimally. At the same time, low capacity utilization would mean lower demand for a company's product.
So on BOPP side, we are running close to full capacity utilization. On BOPET side, we are running close to 50% capacity utilization because BOPET has started in second half of FY23. So it's taking little time for us to reach close to full capacity utilization, which we believe we should be able to achieve during FY24 only in second half. Having said so, in this industry, over a period of time, Cosmo emerged as a leading player. So Cosmo generally do not face much issue with respect to selling its products. Only issue is in a not a normalized commodity part of business or industry scenario, there is a pressure on the margin, which we feel is temporary. And over a period of time, with the emerging demand scenario, it should bridge the gap.
Okay. So by what percentage will this capital expenditure increase your capacity in BOPP and on the BOPET side? Imagine this scenario, a company's manufacturing plant is running at full capacity. Meanwhile, there is strong demand for its products in the market. What do you think this company will do? It will either set up a new manufacturing plant or increase the existing plant's capacity to produce more, sell more, and earn more. The money a company spends to buy assets such as plant and machinery, land, or to construct buildings for its plants is called as capital expenditure. At times, companies also incur capex to maintain the existing assets. Capex or capital expenditure is incurred with long-term benefits in mind. Hence, investors analyze capex to analyze companies' long-term business strategy, future profitability, and the management's vision. In the short term, capex could be a drain on companies' cash flows and pull return ratios lower.
So we are expanding capacity in phases by close to 75% in flexible packaging business. So part of this capacity expansion got kicked off in H2 of FY23. Remaining we expect by the end of FY24 and FY25. So I can say in FY26, we'll be having additional volume by close to 70% compared to the existing level. Having said so, the company still need to do close to 500 crore rupee of capital expenditure in phases over the next 2 years. While a large part of the BOPET capacity addition is already in our balance sheet in March 23, the remaining CapEx will be largely on expanding capacity on BOPP and CPP film, which should reflect in our balance sheet in March 2025. But still, with this CapEx level also, the company's financials remains quite robust. So we are today running close to 1 time of net debt to EBITDA, which we feel even at the peak level of the debt, when we will have full capacity related debt in our balance sheet, but may not have commensurate earning out of it, that peak level, we should not be able to, we may not be able to be crossing the 2 times of the net debt to EBITDA.
Okay, interesting. So, and how are you planning to fund this capex?
So financial closure for the capex is already obtained. We are funding it by raising the foreign currency loan and INR denominated loan. Since the company do close to 50% of revenue through exports, so it makes sense for the company to run a portfolio of foreign currency plus INR denominated loans, which ultimately helps in lower cost of funding. Today, our cost of funding is close to 5.5 to 6% per annum.
Okay, so now generally it is observed that whenever a company goes for a capex, initially the new capacities take time to come to a certain decent level of utilization levels, and in the meanwhile the ROCs could get impacted. So when do you see your, after this capex, when do you see your ROCs coming back to normal levels?
So at March 2023, we are close to 16% of the return on capital employed. As you rightly said, by kicking off new capacity, temporarily it puts little pressure on the ROCE. But having said so, good thing is our past experience suggests we should be able to reach close to full capacity utilization on new capacities in 6 to 12 months. So it's not a very long period from that perspective. So to answer your question, by the end of FY26, we should be able to reach full capacity utilization on all capacity addition.
Okay, that's pretty interesting. And now coming to the businesses that you have started recently, and some of them, one of them is related and one is slightly unrelated. So let's go and understand each of them step by step. So first, we want to understand about your new specialty chemical business. So what kind of chemicals you produce here, and who's the target market? Could you give us more color on that?
Sure. So we started a specialty chemical business close to 2 years back, and FY23 it has done close to 160 crore rupee of the top line. So that business is doing very well. Within the specialty chemical, we have two large verticals. One we call master batches. The other kind of the specific chemicals which add specific properties to plastic or other kind of the products. And second, we call adhesive. So adhesive is also very interesting business, and it makes much more sense for us actually to enter into the master batches and adhesive both, because customer base is already known for the company from many decades. So to similar kind of the customers to whom we have been supplying the flexible packaging from many years, we started selling the master batches and adhesive as well. And being plastic our strength area, and we have close to 30 plus polymer scientists today. So that's why it makes much more sense basically for us to enhance the capacity in the strength areas. It's a very attractive business from the perspective of ROCE. What we broadly expect, close to 25% of ROCE from specialty chemical business in medium term once we reach close to full capacity utilization.
Okay, and what would be the existing business ROC as on FY23?
It is close to 16%.
16%. Okay. Also, throw some light on Ziggly, which is Cosmo's direct to customer pet care venture.
Absolutely. So, of late, we thought to part diversify the business, and we explored many industries actually, and we fixed on venturing into pet care business. Pet care, you will notice, is very interesting industry from the India perspective, growing almost 20 to 25% year on year. And in fact, post COVID, it has given a little further push for the growth of the industry. What we feel because of increasing trend of the nuclear families in India, pet care is going to increase dramatically in coming decade. We also feel that inflection point of this country with respect to pet adoption is about to come, and there are many independent researches which suggest so. So with this background, we thought that it's this immense growth prospects with the pet care industry, and we started with the under the brand name called Ziggly. So Ziggly today has two major verticals. One is the service vertical, another is products vertical. So we offer services like grooming services, vet services, many other different kind of services. And within products, we offer food and non-food different kind of products to our pet customers. So we are fairly optimistic about the industry's growth, and so is for the Ziggly.
So in terms of business format, the products that you sell are your brands or existing brands of other companies?
So as of now, we have been doing existing brands of other companies. But having said so, we are in process of launching couple of private labels. Means the brand will be owned by the Cosmo and Ziggly.
Okay. And compared to your existing manufacturing business, I think obviously, this kind of venture would require lower capital. Is that correct to say?
Sure. So this is not a capex centric business. This is more opex centric business. While we see couple of years initially for the which where we will need substantial investment in this business. But having said so, if we look at different dimension, to put one production line, today we need 300 crore rupee, and we are fairly optimistic within that kind of the total expense or investment, we should be able to create a very significant size of pet care business in years to come. So from that perspective, and being in the direct to consumer business, where the generally the valuations are better attractive, so we feel that it should add a lot of value to our stakeholders.
Got it. But it is generally observed that when companies venture into uncharted territories, investors turn slightly wary. So what is Cosmo's long-term plan for this particular business?
So as we announced on our website also, in medium term, we intend to demerge Ziggly from Cosmo First Limited. And probably at that point of time, we may like to look at options available with respect to the dropping in some investors also. But in medium term, both the entities will run separate.
Okay, now slightly taking a bird's eye view, please tell us what kind of challenges your manufacturing business faces at an industry level.
You see, while the specialty part of business for us has been doing very good, there has been challenges with respect to commodity part of business, particularly in FY23. What we broadly see is demand and supply for the commodity part of business to get broadly balanced in years to come. And at that point of time, the margins should definitely get restored. But you will appreciate that, even in such a bad market also, Cosmo could do close to 16% return on capital employed in FY23, much better compared to our peer group. So we are fairly optimistic about the growth of the industry as such. You will also notice that flexible packaging in India, there are many research reports which suggest that it should grow much better rate compared to even the FMCG sector, because one is the growth of the FMCG sector. Second is a lot new applications are getting added to flexible packaging from other form of packaging. For example, tomato sauces, which largely in the past has been in the glass form, now to a large extent shifting to flexible packaging. So similarly, many other product examples. So we expect this industry to grow faster compared to the FMCG as such. So except the temporary ups and downs with respect to commodity part of business, we frankly do not see any major challenge in the industry. We are fairly optimistic about the industry.
Okay, okay. And just, broadly observing last probably a decade or so, what was a major challenge that a company came across and how did you overcome it? Any past instance if if you're if you can recall.
You see, very clearly about 5-6 years back, we decided to move towards the value-add product portfolio. That was not an easy task. So all of this suddenly, whole organization's KRA, we included selling the value-add products. And on the top of it, we had to change to a large extent, the complete mindset of the employees and related stakeholders, because value add product is a very patience driven business. Generally it takes more than a year just to get qualified one firm in with a large brand like Unilever, Nestle, etc. So having said so, we could also develop our R&D over the last few years. As I said, we today have more than 30 polymer scientists, which definitely adds a lot of value in terms of the product innovations. New products which got launched in India during last few years, a large part of this is only from Cosmo. So to sum up, I think that was a challenge at that point of time to change to a large extent the product portfolio of the company. I would say still the journey is on. It's not complete, but to a large extent, the journey we achieved. And we are fairly optimistic that in coming years, we should be able to achieve 80% product portfolio from value add funds.
Makes sense. Okay. So, and broadly, and even as per industry reports, what is the kind of growth expected in the film business? And do you think Cosmo will be able to grow faster than that industry growth rate?
Sure. So industry is expected to grow close to 10% over the next few years. And there are many independent researches which suggest so. Having said so, as I said, Cosmo is going to increase the capacity by close to 70% in next few years. So definitely we expect growth of the Cosmo First to be better compared to the average growth of the industry. It may also be noted that Cosmo is one of the leading exporter of flexible packaging from India. So one is the growth of the Indian industry. Second is growth prospects in the export. Taken together, we are optimistic about the growth of the Cosmo First.
Okay. So thank you, Neeraj, for taking out time for this discussion and explaining to our viewers about Cosmo First, about industry growth rates.
Many thanks, and thank you for having me.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.